I want to welcome everybody to the 2023-2024 Mount Lebanon School District Budget Forum. Tonight we will drill down in detail of some of the nuances of our budget and try to help our community understand our processes, projection, and budget impact issues. These projections are a snapshot in time and will change a lot over the coming weeks as more information becomes available. This is about a 1-hour presentation. It will be recorded and put on the About Us budget page of our website. And I have about 70 slides we'll move through pretty quickly, and then I'll have some time for some questions once we get finished. So without further ado, the 23-24 Budget Forum. All right, I usually save this slide for the end, but I've been doing this presentation to our accounting 1 and 2 classes at the high school. So this is my contact information, all those silly little letters after my name. A Pennsylvania Certified School Business Administrator. I was just recently renewed with that designation for the next 4 years. So it just takes some continuing ed credits that I go through PASBA to do that. But here's my contact information here, always available by email or phone. Again, this was a slide that I've been using for our accounting classes. You'd be surprised most students don't know we have a business office. But I've recently, been in Ms. Broadbeck's classes, accounting 1 and 2, so I decided to include this tonight. In essence, my responsibilities come at the direction of the superintendent, and I am responsible for most of the departments that don't include academics, which also include transportation, facilities, and food service. So here is our organizational chart for everyone's edification. You can see on the left-hand side there, actually doesn't show up too well on the screen, Director of Business, Board Treasurer, and you can see how the governance flows from the Board of School Directors to the Superintendent, and then us folks in yellow there report directly to Dr. Steinhauer. I think this is an important slide, and we go over this in our base budget presentation every year. But apart from Pittsburgh Public Schools and then North Allegheny, we're the 3rd largest district in Allegheny County with a $115 million budget, just over 5,400 students. It takes a lot of employees to make this place go. We issue about 1,000 W-2s each year, and that includes coaches and subs and a myriad of other things. Usually we pay about 750 people twice a month. We have a very large footprint with our 10 schools, 473 classrooms, 1 million square feet, 5 major athletic fields. Our buildings and grounds crew maintains 53.2 acres of fields and landscaping and grass cutting. We currently have 5 school buses, 17 other vehicles. We have 15 different curricular areas, 38 sports, and 123 coaches. We have 35 budget managers. These include central office administrators, principals, department heads, our curriculum council, adult ed, and a full list of people that have budget responsibility aside from my office. We have 32 activity clubs. We have our federal programs, our summer programs, our summer learning center, our extended school year, and our adult education program, which our #1 seller, and that is driver's education. And then we have our 9 departments: elementary, secondary, special ed, facilities, finance, human resources, technology, food service, transportation. And then the food service fund is a standalone fund. They're a self-operating group that takes in about $2.5 million worth of revenue, and there are 67 employees that get paid out of that fund. So we like to start all our budget presentations with our mission and vision statement. In the business office, we take the district mission and vision very seriously, and this helps guide our work. We strive to provide useful information for our stakeholders to effectively make decisions in the relentless pursuit of excellence. Here you'll recognize our constituent-driven strategic plan. It's our job in the business office to tell the board and the community what this strategic plan will cost. So aligning our budget to the strategic plan is our main focus. So this is another piece I added this year that we talked about with our accounting classes, and I thought it was good for everyone to see that as well. So who governs a school district? So we get handed down mandates from federal government, state government, which includes the legislature, Secretary of Ed, the governor, and ultimately we're governed by PA School Code of 1949. Allegheny County, most people don't realize that we have to deal with them on almost a daily basis. Allegheny Council made some decisions recently that are going to impact real estate assessed values and also impact required sick days for part-time employees of our school district. So we are adhering to those legislative actions as well. And then also our local school board, our 9 elected members that set the policy and govern. The IRS, the Government Accounting Standards Board, which is a wing of the SEC, and then all of our food service operations are audited very, very heavily and carefully by the USDA triannually. So we have to meet all their standards for food and also reporting and accounting of all that food. So I've carried this slide around with me for the last 12 or 15 years, but budgeting is the accepted method for governments to allocate scarce resources to demanded services. As a result, it is a powerful tool of one of the most important governmental processes. The budget processes focus attention on the decisions the government makes concerning overall direction, priorities, and use of resources. As the focal point for key resource decisions, the budget process can help governments make better financial and program decisions, improve operations, and enhance relations with citizens and stakeholders. That is by far what we try to achieve during our budget process. Everybody's probably quite familiar with our student-centered budgeting model. It just puts students at the center of and academics at the core of our decision-making. Anytime we try to make reductions, we make them as far away from the classroom in that outer wing or the number 5 as possible. So we'll talk a lot about enrollment. I've added a nice piece of enrollment slides this year I think will help people understand how the demographics in Mount Lebanon are shifting. Overall, we've had between 54 and 5,500 students for the last 30 plus years. You can see our cohort survival method, which is how we calculate enrollment for next year, how that shakes out as far as elementary, middle, and high school, and then the administrators that we have at those buildings. So this is kind of a hard slide to see, so I broke it out in the subsequent slides, but there's just a number of different ways that we look at our demographics. In the last few years, the number of low-income students and the number of special ed students and the number of English as a second language students have all upticked slightly, and you'll see that in some slides after this. This is also where I get some of the live birth data from Allegheny County to make enrollment projections. We get birth rates for our zip codes and calculate in 5 years that those children will end up in our schools, and then we matriculate them through the grades to try to predict our enrollment. We're very lucky the way our enrollment is and stays level. We're not outgrowing our buildings, nor are we declining enrollment where we're losing staff in programming. So this is a new slide this year, and it really shows that the demographics in Mount Lebanon is shifting. In 2010, we were 90% white. Now Mount Lebanon is 84% white. And you can see the increase, the most increase was in 2 or more race children that identified as that in our demographics. So things are shifting in that regard. Again, I touched on in the first slide that our low-income and special education enrollments have increased slightly over the past 10 years. And this year we've seen a really big increase in English as a second language students, and we're actually up 31 students this year, and the majority of them are refugees from Afghanistan and Ukraine. So they are receiving services, and we have quite the plethora of services that we're offering these children. So this is another way to look at our special ed and low-income students by building level. I know that's kind of hard to see. It would probably show up better on the recording, but just another way to look at it by building, and you can see the enrollment and how it gets giant when we have almost 1,800 kids here at the high school. Our special ed population in maybe 2009, 2010 was about 8% of the population. It's nearing 15% now, so it's gone slightly up over the years. Again, our low-income students have also followed that same path. They were around 8% as well. They're ticking up to about 11 to 11.5% of the population now. So enrollment drives staffing. So this district has done a great job over the past 100 years of aligning their staffing with their enrollment. So that is a key piece to budgeting. It's some things that I've seen, other places that I've been that didn't happen. Former district that I was at was losing about 100 kids a year over a decade. That's 1,000 kids, and they didn't adjust their staffing accordingly, and were staffed for about 5,000 kids when we only had 4,000. So when you see districts going through layoffs and furloughs, that is usually the reason for that. So you can see we have 390 or so classroom teachers. We actually have 440 members of our collective bargaining agreement, but that includes nurses, counselors, librarians, and special education teachers. So we are about a little under 14 students per teacher as far as our ratio, and you can see that's held between 14.8 and 13.8 over the last 5 years. So there's just some comparator districts that touch us or are nearby, and you can see we're kind of at the middle level there as far as the FTE student per teacher comparisons to some of our neighbors and comparators, around 14 to 16 kids per class. So this is another way to look at our FTEs. These are some of our support folks, guidance counselors, nurses, occupational therapists, psychologists, social workers, and things like that. So we have about a little under 26 FTEs there, and then it's about one of those folks for every 200 students. So another good ratio there. So the story of school district budgets continue to be, and I think will always be, our mandated costs, our collective bargaining agreements, and we have obligations to our employees, to our students, to the state of Pennsylvania, to our bondholders, and these costs kind of just happen by opening the doors every year. And they're also bound by mandates, what I talked about, our governing bodies, and by school code, and by collective bargaining contract. Discretionary spending is really at a minimum in a school district. In fact, we only spend about $1.8 million of our $115 million budget on supplies, and that includes paper and toilet paper and things like that that we need to operate as we go through. So this is the part of the process where we reduce expenditures and we refine our revenues. So we track our revenues very closely. We look at all the revenue categories each month, Dr. Steiner and I, and we send a report home to the board. But this is our revenue analysis over the last 8 or 9 years, and you can see how closely our budget to actual turns out. The only anomaly in there was 2017, where we had an uptick of about $5 million, and that was because of a bond refinance that was eventually transferred to capital reserve to take on our air conditioning and rock pile projects. So you can see our revenues, we budget them very closely, and they come out almost budget to actual every single year. So we're going to look at expenditures two different ways today. First, we'll talk about revenues, and these are the 4 revenue categories that we focus on. The 6,000 level, which is the amount of money produced within the boundaries of the school district. So that's local taxes, earned income tax, delinquent tax, real estate transfer tax, and then interest income, and then any of our charges for services end up in that 6,000 category. The 7,000 category originates from the Commonwealth of Pennsylvania, so any of our subsidies for retirement or for basic ed, special ed, block grants all run through the 7,000 section. The 8,000 section, we had a nice gift from the government, from the feds a couple years ago, as far as our ESSER money. That money has been received. It has been spent appropriately, so that is now back down to about $1.3 million we receive in federal funding. A lot of that is based on poverty levels. The 9,000 section are basically issues for long-term debt. We rarely get into those in the general fund. That usually end up in the capital reserve fund. But those are a brief description of our function levels of revenue. So just to kind of break those categories down in a pie chart so you can see how heavily reliant we are on local funds. 74% of our funding comes from local sources. Our community values education, and you can notice that in the pie chart. The other almost $27 million from the state, and that small sliver from the federal government. So the onus on funding our schools really falls on the back of our 9 elected school board members. So here's another look back. As far as you can see, the blue category is the local revenue sources, and you can see throughout the last 10 to 12 years here, we are relying on those local sources, and unless there are some extreme changes to schools' code and school funding, that will continue to be the case for Mount Lebanon. So this is a revenue budget-to-budget analysis of what kind of transpired the last 2 years and where we're at this year. The actual totals for 21-22 there, about just under $110 million in revenue. The 22-23 budgeted about a little under $108 million in revenue, and then about $110.4 million in revenue this year. You can see the change, the uptick in both the local and the state revenues. That was simply because we didn't take, there wasn't a state budget when we balanced our budget this year, and we got some gifts from Governor Wolf as he was exiting office. So we have put those state subsidies level funded in there currently. And then as far as the local tax, we have seen quite the influx of interest income based on the Federal Reserve rates. They just took it up another 25 basis points today. So most of that is for interest income and for good collections and earned income tax, is why those are currently more than they were last year. As far as the federal funds are concerned, we continue to see our Title I and Title II dollars just slightly down, and we've accounted for those in the federal section. So another way to look at our local revenue as far as a graph chart, and you can see the reliance on local income tax there, about $69.4 million for the 22-23 school year. And so $78.7 million of the $82.3 million in local revenue comes from just real estate and earned income tax alone. And that is a big factor in why our bond rating is as high as it is. We have, our community pays their taxes at about 98%, half a clip, and they continue to increase year after year. So that is proof to Wall Street that we're on good financial footing. So just to break out the local revenue, there are no real estate tax increases in the current draft of the budget. That will be part of the board's discussion here in April and May. So you can see the earned income tax has rebounded quite nicely since the pandemic hit. As far as other taxes are concerned, we did see some slowing down in delinquent tax and a little bit in real estate transfer tax. However, the delinquent tax, more people are paying at face, so that's a good thing. And the real estate market, even with interest rates at 5.5%, is beginning, those receipts for real estate transfer are continuing to heat up. And then you can see the interest income, what we collected in 21-22, what we budgeted in 22-23, and then our draft for 23-24, how that's come back nicely, and that's obviously because of the Fed increase. The other income are really our charges for services through our adult education program, and building rentals and whatnot are run through that other category. We'll change gears a little bit to the state revenue. Our largest subsidy from the state is actually our PSERS reimbursement, not our basic ed or special education reimbursement. And it's based on the PSERS rate being 34% of salary. So for every dollar we pay out, 34 cents has to go to the state for pension costs. So, any increase in PSERS and increase in salary increases our subsidy, but it also increases our expense significantly. So the basic ed is now over $7 million. It used to be about 6.6 a few years ago. So those investments in education by the legislature are very helpful to Mount Lebanon. This year, the governor has proposed a little over $1 million more to come to Mount Lebanon, which is about an 11% increase, which is welcome because we are lagging behind as far as state revenue is concerned. So we carved out the budget-to-budget state revenue here, line by line. You can see some of the increases we've taken. Again, the governor's budget from 22-23, which we passed our budget before they passed theirs. We've put those increases both in basic and special ed. And then because there's increases in salary, the Social Security and PSERS reimbursements are increased accordingly. Federal revenue, that small 1.8% figure, is 98% is spent on salaries and benefits for their specific grant programs, which include reading specialists, IST teachers, and special education salaries. So those are required expenditures from the federal government. We don't have much control on how we spend those monies, but the majority of them go to our people. About 98% of that $1.3 million pay salaries and benefits for our teachers. So again, the other financing, this is for insurance recoveries or bond issues, which are few and far between for us currently right now, so we won't focus on anything there. All right, so now we'll flip to the expenditure side, and we're going to look expenditures two ways, both on a function level and object level. If you go back a few years ago, I did a Budget 101 presentation and kind of explained the chart of accounts and how we delineate things and code things correctly, because they eventually end up in PDE's hand and then eventually in the U.S. Department of Ed's hand, and we have to have the coding correct or their reports won't come back correctly. So we have 35 different department level budgets. Most of those budget managers have multiple responsibilities. You can see the academic departments kind of on the left-hand side there, and then all of the other curriculum and other departments that we deal with. So these folks have budget responsibility. Nothing gets paid or no budget gets signed off on without Dr. Steiner or myself stamping that. However, these folks are professionals in their areas, and they know what it's going to cost to run their departments. We're not talking salaries and benefits. We're talking about supplies and professional service and softwares and books. And they come back to us with their budgets, and once they seem reasonable, they are entered into our budget models. Again, you take salaries and benefits at about 80% of our budget. Our debt is 10%, so 90% of our budget's even filled out before we get into any of these kind of ancillary costs. So to see that in a pie chart again, to break down, obviously, $60, $70 million of our expenditures is geared right for instruction or the support of instruction, which is, central office, nursing, counseling, those such of things in the red area. And then you can see that purple carve out, $11.4 million, is for the debt service on the high school and for the myriad of other projects that have been done around here. That small sliver of that 3,000 is where our student activities are housed. That's all our athletics and band and fine arts runs through that 3,000 section. So the 1,000 section, again, is our biggest piece of the budget, and instruction includes all activities that deal directly with the interaction between teachers and students and all those related costs. So when you see a teacher, they're booked to the 1,000 section of our budget. It deals with instruction. So I broke down these categories a couple different ways for you to see. Regular education, about $56.2 million of the budget. Special education, about $12.5 million of the budget. Again, special education population being about 15%. Their costs are normally higher. That's why that runs a little higher at close to 18%. And then we have our vocational school, our Parkway West kids that run through the 1,300 section. And there's a little sliver for 1,400, and that's some of the adult ed and driver's ed expenditures. So just to carve that out in another way to look at that, you can see the increases in regular ed. I can tell you right away that is based solely on increases in salaries and benefits. Special education, increases in salaries and benefits, also increases in professional services, tuition, and transportation for such students. And then you can see going on down the line that everything stays pretty level as far as that's concerned. We have a teacher's contract that is under negotiation currently, so we're using some estimates to fill that out. Our current estimate for healthcare increases is 18%. We'll get into that when we look at it in the object section of the budget, but that is driving cost up significantly. We spend a little over $10 million a year on health insurance, so an 18% increase is $1.8 million, so a significant amount for this district. So I took the budget to budget and broke it down in the special education category, so you can see some of the categories that are increasing as we go through. The biggest expense is both emotional support and academic support. And again, like I said, we were at about 8% of our population 10 to 12 years ago. That has now ticked up to 15%. So you'll see this historically, going back 10 years, what a special ed kid costs, an actual per student cost, what it was 12 years ago. We're almost getting close to doubling that, looking at the 23-24 school year. Like everything, costs have risen. Inflation plays a factor in its salaries and benefits. Costs for professional services, costs for busing, tuition costs are all factored into that point. And you can see there's a statewide average over there. It's about $16,345 statewide. So this is the statewide population versus our special ed categories. So our special ed students are broken down into three categories: Category 1, 2, and 3 students. Category 3 students are students that cost over about $75,000 a year. The orange square there are students that cost between probably $25,000 and $75,000 a year, and then the blue are the students that are under $25,000. So the trend line that you can see on there, the red is our district enrollment, right at about 15%. But you can see the region is about 19%, and statewide, most districts, which was very surprising to me when I got here that we weren't at the 20% special education number, because that is what I've seen in my previous work. So we'll flip to the 2000 sections. This is the support section of our budget. So these are administrators, guidance and healthcare folks, support services such as tech, operations, security, all run through this section of the budget. It's smaller than academics, obviously, but we'll look at the pie chart to see how you can see it broken down there. The 2100 section are guidance counselors, counseling, attendance, psychologists, speech, social workers. 2200, technology support, library, curriculum development, staff development. 2300 is our board service. Those are tax assessments, negotiations, legal, superintendent and principals run through that 2300 section. 2400 section is our health supervisors, medical services, dental, nursing. 2500 is our business office, payroll, accounts payable, accounts receivable, internal auditing, and all our printing runs through that section of the budget. The 2600 section, which is large, is our operations group, and the maintenance of buildings and grounds, vehicle maintenance, safety and security are all run through that 2600 section. We do have 76 custodians. Excuse me, there's about 93 people total in that group. Obviously, they clean 1 million square feet every night, so they're at the biggest piece of that budget. Transportation at 2700 level. 2800 is evaluation, information services, HR, data processing, and then the 2900 is a pass-through from the IU. We did that Monday night's meeting. We talked about the program services budget, and that's about $89,000, and that's what runs through that section of the budget. So I broke that graph down into numbers so you can see some of the increases across the board there. Student services increasing. Again, a lot of this has to do with where folks are at in the union contract and whether they're hitting the jump step, what kind of benefits they have drive a lot of those costs. We have in the health line item, we have an additional nurse built in for next school year, so that's identified there. As far as the operations are concerned, we shifted about $300,000 that was normally spent out of capital into the general fund budget, as these are really operational expenses that happen year over year. Our transportation line item has continued to increase. We've added about 30 additional runs this year, most of them to do with outside placements of special education students. And obviously the price of busing and finding bus drivers and things like that have increased costs. And as far as the central administration, our $500,000 tech refresh that was formerly paid from capital has been shifted to the general fund there, so you can see how those increases calculate. So the 3,000 section. So this is pretty easy: student activities, athletics, community services. Pretty simple the way these are broken down. So the student activities, which again are fine arts, marching band, any of the arts run through that section of the budget, after-school activities. And then the athletics section, that is again for all of our athletic teams and 120-some coaches. And then the community service portion of the budget, most of that is required expenditures through Title I and access programming that we have to do in code to that section of the budget. So just to look at that on a number level, you can see not a huge increase in that section. We do plan for an increase in the athletics section as all of the EDRs for our coaches, which are our extra duty remunerations, what our coaches get paid. We don't know what that contract figures will be as we're negotiating that currently. And a lot of that has to do with inflation and uniform refreshes. What years, when the football team needs uniforms and helmets, that budget usually increases in that year. The 4,000 section is not used in the general fund. This is reserved for capital projects. So in our Fund 39, where we plan for our capital project, we use this account coding system on that side. The 5,000 section includes our debt. We'll just skip right ahead to that, and that is our debt service payment for next year, about $11.3 million. And then we have to book a portion of the food service expenditures to the food service fund, so we have a transfer over there. These are our new bond payments. They would be about $800,000 higher than this should we not have done the refinance in the fall of 2020. So we're very thankful for that. That has leveled out some debt and saved the district $11 million over the next about 15 years. So just a way to break down our other financing, you can see debt service is the main piece of that. You can see in 21-22, we transferred money to capital reserve. That's where this transfer that we did in February will show up when we report the 22-23 school year. And then you can see the allocation to food service there. So this budget actually decreased just slightly. All right, so now we're going to look at things in the object level. These are things I think you'll understand a little bit more. Our salaries and benefits being the biggest piece of that. You can see salaries and benefits make up 78% of our budget. So we're not building widgets around here. Our driver is our people are our teachers. And you can see how that's broken out in that category. On the other side of things, you notice that our local revenue makes up about 78% of our budget. So our local taxpayers essentially fund the salaries and benefits of this school district. And like I said before, you add in that debt service piece in the 800-900 section, and about 90% of the budget is filled out before we've bought any supplies or professional service or repaired anything. So to break these categories down, you can see the raises at 4%. The benefits are driven obviously by salary for PSERS and Social Security, but also by that 18% health care number. The purchase services is some of our lawyers, a lot of the professional services that our special ed and ESL students use. The cost of those services are going up, and we need more of those services, so those are reflected in the budget. You can see some increases in repair and maintenance. Again, we shifted some of these expenditures to the general fund from the capital reserve fund. Our other purchase services, weird term, that's the account coding system from the federal government. That is actually our insurance and transportation section of the budget, and you can see that is $500,000 of that alone is tied to transportation. Our supply budget is up. They changed some account coding a few years ago. We've shifted the $500,000 of technology expenditures to the supply line item. Additionally, inflation has affected that, and additionally, because that used to be considered a piece of equipment, now these Chromebooks and iPads only last about 4 years, so the state has told us to record those as supplies rather than equipment. Equipment is something that usually lasts over 5 years. That is just simple replacements, things we have for projectors and TVs and whatnot that run through that section. So then you'll see again the debt at the bottom there, 11,358. That's our transfers to the debt service fund and transfers to the food service fund. So overall, expenses in this draft of the budget have increased over last year by 6.68%. Again, a lot of that is tied to salaries and benefits and some of the shifts we've made from capital to operating. Again, we talked about at the beginning, and we showed this slide in the first blush of the budget, but these are the employment categories that we go through staffing over the next 2 or 3 weeks. So you can see that we've had a reduction in administrators over the last 14 years. You'll see the uptick, however, in the personal care assistants. That is obviously reflected in the budget. But again, classroom teachers are up 3. But again, our staffing is up. However, our enrollment is level, but it's that 2 and 3% are mirroring each other, and that is the key to balancing a school district budget forever. Align your staffing with your enrollment, and you will be just fine. So I broke the salaries out so you folks could see them in graph format. Obviously, the teachers make out a significant piece of the budget, and the 120 salary section, about $42 million, will go to teachers for next school year. And you could see the other categories, how they're broken down. Obviously, the next 2 administrators, and then our labor force who cleans our classrooms and maintains our buildings, who are here every night, make up the other big pieces of that. So salary increases currently at 4.09%. I will say this does include increases for the teacher's contract based on estimates from last time around. We have 3 other in-force collective bargaining agreements that now pay all of our employees $15 an hour or more. Those are included in these salary figures as well. So let's break benefits down a little bit. In no other industry would you see that 53% of our benefits budget goes to pension. Now, I talked about that a little bit at the beginning, that 34 cents on every dollar that we pay out has to go to the state for pension. So that is a significant number for this district, $18.7 million. And you could see the other piece of that is the health care, nearing almost $12 million for next school year, and then the Social Security carve-out piece. All the other little things, unemployment comp, workers' comp, aren't much material compared to those giant pie pieces there. So healthcare is the story this year, and you can see over the last 10 years that those rate increases have been anywhere from 2 to 4%. And we were living large when the national averages were 10 to 15%. So we were making out. However, on the flip side, maybe those rates should have been ticked up a little higher because our projections for next year from the consortium are close to 18%. So that's what we have figured in the budget currently. Those figures come out on March 31st, and we'll have a better idea of where we're headed in that regard. We've been very fortunate with these rates over the last decade. Again, like I mentioned, maybe the rates not rising as quickly or as much each year put us in a bit of a hole, talking about 23, 24 numbers. COVID has a big impact on that. Inflation has a big piece of that. But the calculation for health care has to do with hospitals paying their staff more. It has to do with just the cost of supplies going up, and a big piece of it is prescription drugs. So 3% of the 70,000 people that are on the ACTIC consortium make up 53% of the prescription costs. So prescription drugs are a large piece of what is driving that increase for next school year. So this is our PSERS rate. So if our salaries in 12-13 would have been $55 million, our PSERS bill would have been about $6.8 million. Instead, it's nearing $19 million. So it phased in from about 3 or 4% all the way up to 34% over the last decade, about $1 million a year, or about $500,000 in taxes every year, just to meet our pension obligation to our employees. So the employees also pay their fair share of that, but our share at 34%, you can see what a savings that would have been if our rates could have been back in the 8% range as they were 10 years ago. So just to look at insurance in a figure way rather than a graph, you can see the big increase there is obviously the health insurance piece going up almost 18%. ACSHIC is a self-insured $370 million operation. There are 70 different schools and 70,000 school employees in that unit. So it's self-sustained, self-insured. There's no stop-loss insurance for those folks. They pay all their own claims. And COVID has wrecked some of the timing involved in that. A lot of delays in maybe checkups or routine procedures that have kind of snowballed recently or created additional health problems for folks. So a lot going on in the healthcare field and why those increases are happening. So the rest of these budgets are small pieces of the pie compared to salaries and benefits and debt, but our 300 section, our purchase professional services, are broken down into these categories, just over $4 million. So repairs and maintenance, about $1 million of the budget. You can see how those are spent. Rentals, extermination, cleaning services, utilities, and then actual repairs of the building. 500 section is, again, where we capture transportation, insurance, and some printing costs, tuition. And you can see, again, the transportation from 4 years ago is up $1 million of what it was. When I got here, it was just below $800,000. It is now almost $1.8 million. And then that last section, the 590, is any in-state tuition, institutionalized children, and any kind of payments to the IU for those services. So our supply budget, you can see about $2.4 million. About $500,000 of that is related to our technology refresh that we do each year to keep our one-to-one program together. And then you can see what we spend on books and periodicals, and now e-books and e-softwares are part of that pie as well, and then our energy. This district is very mindful. We have 2 energy managers, both our electrician and our HVAC personnel. Both hold certificates and use the software to track our energy, and I meet with them monthly, and they give me updates on projects they've done, whether it's changing LED lights out or working on building envelope or installing water-saving faucets or whatnot, and having dimmer switches on your lights. They do all those kind of projects all the time, and that has really stabilized our energy costs. We have some locked-in contracts for natural gas and for electricity, and those are helping keep the cost level even though they're rising for the general public. The equipment category is easy. Again, it's just with the refresh of technology now in the supply section, these are for minor equipment replacements that last over 5 years. So just another way to look at our debt here. So we made our last payment on our 2013 bond this past February. So we're left with only 3 remaining bonds, and you can see the principal and interest on those bonds. The 2013 bond was not callable until 2023. So when we refinanced it in 2020, we still had to make the interest payments for the last 3 years. That last interest payment was made about mid-February. So these are our last 3 remaining bonds. All these interest rates are below 3%, which is really good based on what the market has out there now. After this year, we'll owe about $120 million more in bond payments. Again, that's for the high school and all the big projects we did. Those will all be paid off in 2034, 2035. Just in time to maybe fix some middle schools and some elementary schools. So you can see what our bond payments look like over time. So this is part of the Local Government Debt Act. Maybe in the late 70s they came out with that, where the debt has to be relatively level over the lifetime of the bonds, no matter what bond payments you're talking about. So you can see 2020, the 2020 bond, you're basically only paying interest until you get to the 2030, 2031 school year, and you can see how the 2015 bond kind of phases out there. So that's what our debt service schedule looks like. And then those are our last payments in 34, 35, and this high school will be paid off then. So we'll talk a little bit about taxes and what a possible tax increase could look like based on your home value. You get an assessed value disc. It's called our homestead disc from the county. We'll get that in May and be able to make a more accurate projection based on appeals and whatnot. But in Act 1, our Act 1 limit this year is 1.2667 mils. This is how it equates out for housing values between $100,000 and $400,000, what the cost would be yearly and what the cost would be monthly, should the board consider this tax increase. Some more historical data with tax increases over the last decade. Since 9/10, our average increase is about 0.48 mils, or about 1.21%. However, we haven't never dealt with an inflationary environment at 8.5%, 6.5%, like we have this year. We haven't seen healthcare increase 18% in 1 year. So there's significant impacts on our budget this year related to meeting the guidelines of our collective bargaining agreements. This is probably hard to see, but these are some comparators and some folks that touch us and their millage rates. You can see us in the middle there. We're not quite as high as South Fayette or Upper St. Clair. Bethel Park is lagging just behind us. But I think it's very important to understand that some of those districts on that list, like Pine Richland, like North Allegheny, like South Fayette, that haven't had upticks, are able to build new houses. We're very landlocked here in Mount Lebanon. We are kind of at the bell curve in our 6 square mile and our 35,000 residents. There's nowhere to build but up. So the assessed value plays a big piece of this, where other communities, their assessed value is jumping 5 and 10% a year. Ours is maybe jumping 0.5%. So we don't have the luxury of, new plans of homes going up. We're landlocked in how we are structured here in Mount Lebanon in just those 6 square miles. So you can see, a strategy for schools surrounding us to balance budgets is to have slight increases in real estate taxes. So some of the next steps will be taken. The next 3 weeks are going to be absolutely critical as far as balancing the budget. Our staffing meetings happen the next 2 weeks. We get our health insurance number. We'll close the month of March, and we'll have a very true picture on how our taxes and how our other collections are trending. We'll have a better picture of how the legislature will turn out. So it'll be up to the board to consider, how to address this out of balance, to consider a tax increase, to consider increasing charges for services. We'll analyze our staffing, refine our revenues, reduce expenditures where possible, and then we'll be watching Harrisburg very, very closely to see what they have in store for us. So we're at the midpoint of our timeline here. We're at the budget forum on March 22nd. We'll review the budget again with our board as a whole in April. Our timeline includes the adoption of the proposed final budget on April 17th. After that, we are allowed to reduce expenditures and add revenue, however, not a lot. And then May 22nd would be the adoption of the final budget. This timeline is very advantageous for Mount Lebanon, both for the collection of interest income, for cash flow. Our tax bills go out June 1st in coordination with the municipality, so that saves us mailing. Collections go much smoother, and we get that cash in the bank before the fiscal year starts July 1. So other districts use tax anticipation notes, or they're reliant on the state government to send their funding through. Our timeline and our budget is structured in a way so we're not taking those loans, so we're not relying on the state to do that. We kind of handle our own business in-house here. So again, this presentation will be recorded this evening. It will be part of the About Us section of our website /budget. We also have a YouTube page. It's called the My Lebo YouTube page. All our board meetings and all of my recordings are there. Anybody that wants to look back, a couple years ago, I did a Budget 101 presentation. It kind of broke down the chart of accounts and how we calculate a lot of this stuff. But this is a culmination of a lot of work of 35 budget managers, folks in my office, Dr. Steinauer, lots and lots of meetings, lots and lots of discussions, and now we're at the point where we're going to go line by line through our 4,000 accounts in the chart of accounts and get us to a balanced budget for that May meeting. Anybody has any questions, you saw my contact information at the beginning, please reach out by email or phone, and we'll take a couple questions from the folks in the room if anybody would like to ask a few.